weekend, all. Ira Epstein with the long hair. It's time for a haircut. And this is your financial market wrap-up. And this is your weekly edition, which is a bit different than the daily editions for this Friday, the 17th of May, 2019. Remember, in the weekly edition, we'll start off with one monthly chart, and then every other chart's going to be of a weekly of the futures that we're going to cover. The rationale, we're looking for the bigger picture. The daily charts have a lot of the noise. Events this week, and I'm doing this all from memory. There's no cards up here or anything. Wow. We know that last week we saw the fall apart of the U.S. trade deal, right? The U.S. trade deal with China. That thing's fallen apart. It's gotten worse, if anything, because yesterday, that's Thursday, President Trump decided to go after Huawei, the giant telecom company out of China, saying basically we're not going to do business, we're not going to let our companies do business with them, we're not sending microchips to them, enough. This is reaction to the fact that we believe as Americans that the Chinese have reneged on things they had agreed to. The Chinese, in turn, today, and that's what hurt the stock market late in the day, decided to uninvite us to trade talks, and they're thinking of further retaliation besides the tariffs they put on right after we slapped more tariffs on $200 billion of goods effective June 1st. They're going to do $60 billion. We only get, if you will, they can only do so much to us because we don't ship to them a lot. The good news is that the U.S. decided to not fight a front on every side. So, late in the day today, we heard about noon that President Trump and Justin Trudeau had reached an agreement on steel and aluminum. Within 48 hours, the tariffs are to be removed. The same will apply in Mexico. As I understand it, Mexico has passed their Congress some labor laws that Speaker of the House Pelosi was demanding for workers' rights, and if that is signed into law, this deal, this new USMCA deal is what? Going back to Congress. Let's see what Congress comes up with on that. But I think this gets a lot of people on board to make that deal. The next front that the president decided to put to bed for a bit was not putting tariffs on European or Japanese autos or auto parts. So the focus goes on to China head to head. Good move. Whether this all works out, who knows? Metals were down if you look at them because if you remove these tariffs, you're removing some of the inflation. About 30% of our steel, and I believe it's maybe some aluminum, comes from the combination of Mexico and Canada. I know a lot of the steel comes from them. That lowers the prices, and I'm sure it's being well appreciated here in the States. We'll see. Every group has a different opinion, but we'll see what goes on with that. Then we saw that the president's going to give $15 billion to farmers to try to support prices, and of course we're in the midst of a weather market for corn, but seeing this deal with explode in our face with China again today certainly puts selling pressure onto the soybeans. So let's go to the stock market because that's the real arena. We're in a bit of a correction. You were down for the week 2.9%. Well, for the month, you're down 2.9%. I said that wrong. For the month so far. When you take a look at the weekly chart, you were down less than a percentage point this week. But you're still falling from this high, and you're getting something of a reasonable correction in the market. As for the thrust of the market, it shifted gears on you. If you look here, you can see the market was in an up thrust, and then it fell, and it's following through from that. Support back at the 2815 level in the S&P. A lot of analysts think the market is going back into this general area right through here. I don't know that it is or isn't. I look at the first support, the 18-week moving average. When you come to the daily charts, what we have now, and I put the swing line on it, we still have a pattern that's in place of higher lows and higher highs. To put doubt in the market's mind, you have to break that pattern, in my opinion, which requires getting under 27.8950, about 70 points lower. It's a sizable break. We'll see if that can happen. Where did the market stop? And I'm going to backtrack here a little bit. This is what you looked like last week. As regular viewers, and I hope most of you are, you know that I believe in a line in the sand. That line in the sand to me is the 18-week moving average of closes, the 18-day, or whatever 15 or 20-minute chart you're using. Go back and run it and see how often this number pops up. So Here you are last week. All you did is fall to it this week. That's basically what happened. You finished 50 points over it, 28.62. The worst of the week was right after the tariff, the trade deal, if you will, fell apart, and the tariffs went into place last week. Market held that and did some recovery. When you look at Bollinger Bands, you haven't been able to get up to a Bollinger Band this high since last September. And while the market has made a nice recovery, that's a bit telling to me. It tells me that as much as the thrust is here, as a technician, often a real powerful market will go to a Bollinger top, or if it's a bear, to a Bollinger low. One of the two. You didn't do that. Momentum has turned on this market to the downside. If momentum leads price, and I believe it does, we should see what happens if this market cracks last week's low. Does it start challenging 26.95, which is close to what a lot of analysts think that 26.50 zone will be, or, and this is why I think they came up with their numbers on the weekly chart, the 26.39 level. Now, there are some gaps on charts if you go back in there, and that's probably what those analysts are looking for. In the NASDAQ, momentum down, the trend is still up. You'd have to take out 72.76 to break the pattern of higher lows, higher highs. Look where the market went to on the first break. I'm going to call it that line in the sand again. Stop there. But if you take out 72.76 like in the other markets, you put into play the possibility, and that's all it is, a possibility, that maybe these numbers, 67.80 to 66, 66.08, come into play again. In the Dow, you're out of your trend. You have a market that actually stepped out of it last week, not this week. You had the higher high, lower low. But the difference now is the market finished down for the week. It's at 25,760, under the 18-week average. This becomes the potential for the market, at least support zones. Doesn't have to go there, but the 100-week average. The Bollinger Band's going to climb a little bit when we reopen on Sunday night. Momentum is turned down. All three markets have turned their momentum down, and why should the Russell be left behind? And it's not. Momentum down, higher high, lower low, the bias down because you closed under the 18-week average of closes. So I see these markets as now in a bit of problem. If you look at the VIX weekly, the support of the market's back at the 18 and the 100 week, resistance back up at 1825. The market, of course, did get a good rally early on in the week when the tariff news came out that they were going back into place, but it sold off as time went on. When we come to the 10-year notes, I'm a bit nervous about it up here. You're back to the upper Bollinger Band, and I'll stick with what I teach. Bollinger Bands, generally the first time you hit them after correcting away from them, offer some resistance. Momentum is up, the trend is up, you're in a resistance area, that's all. It's not the end of necessarily going up. Some people think you're going to go in the 10-year to 220. When you look at TLT, trend is up, higher lows, higher highs, next resistance, if it moves higher, wherever that Bollinger Band comes in, support. The support's in front of the last break low, so that's still looking like a pretty good-looking chart. A hard chart has been the dollar index, because you've been caught in this sideways action up here that refuses to keep a trend in place one way or the other. And it's still doing that. You've got a lower low, higher high, but momentum is still pointing to the upside, as is the bias. Next stop could be that 98.02 level, the upper Bollinger Band. And a market that's under pressure from every corner is the eurocurrency. First of all, the Brits are in big trouble. Miss May's, bye-bye. Now you've got the economy slowing down. The trade war doesn't do them any good with China. And China also said its GDP with these tariffs could be hurt by 1 full percentage point. That's quite a bit. Lower highs, lower lows, trend down, bias down, 111.58, possible next target of the lower band. Great time to go to Europe. British pound. Now you're looking at what's happened. It's basically done deal. From the looks of it, that Miss May's not going to be able to get her Brexit package through. I think over the weekend we'll hear more on a timetable as to when she might be leaving office. We'll see who's going to come into play here. There'll be a lot of names that are thrown out. Lower highs, lower lows, down you go. Where's Brexit? Anybody's guess. It's like every day is a major report to trade in the Brexit. In the Canadian dollar, Support should be the lower Bollinger Band, the first challenge of it. It hit it. It bounced away, basically. The trend has been down. Will this market get a better reaction? Well, if it does, you first got to take out this high right here of 74.84 to break the downtrend. Then resistance becomes 75.10, close over that number, and you change the picture. But the bigger picture is sideways action. You've really been stuck against the 18-week average down to the lower Bollinger Band. In the Japanese yen, this was your safe haven play when last Sunday we knew that the deal was basically over between the U.S. and trade talks and all the tariffs were getting put on. Higher lows, higher highs, just missed that upper Bollinger Band. I don't know if it's going to hit it or not. You have divergence here in the sense the market's acting like it wants to come back into this potential support, 90.53, 90.58, momentum up. I'll call the trend up, the bias up. That's the support level as I see it. Bitcoin, whoa, what a week. This market finished up 800 points for the week, up 12%. Now, it was wild. You had one day it was up 25%, next day it was down 20%. I mean, pretty crazy action, but still bullish looking chart, hasn't changed. I'm a little concerned the fact that you closed at 71.80, which is over the upper Bollinger Band, and that's 1, 2, was this week over at 2? Yep, 3, not this week. Okay, so you have 3 weeks in a row over the upper Bollinger Band. I count each successive week is one of the 5 percentage points that the market can stay outside of a band. There's nothing magic about it. It's just a way that I look at it. So it's getting a little extreme is best the way to say it. In the differential between Brent and WTI crude, well, you know that Iran and the U.S. are in a war of words. I'm not saying they're in a war. Everybody's trying to tame it down. The president let out Mr. Bolton, who's like the bulldog. Now the president's trying to pull him in a little. Everybody would like to talk. But it still puts a bid into the Brent, and that's what's happened. You've got the higher lows, higher highs. Momentum, though, is waffling. And that makes a little bit of sense if you think about it. Is OPEC going to produce more of this Brent? It doesn't take away the war bid, but it could create a problem. If the market takes out, in my opinion, this low right here of last week, which was 68.76, you would break the pattern of higher highs, higher lows. Right now it's in place. I see a wobbling of momentum. I'm not convinced you're going to get back to the Bollinger Band, but the trend is up. WTI crude is not in that trend. It has a higher high, lower low. The question is, does it want to challenge support between the 100-day and the 18-day average? But I'm not seeing a trend, and I'm seeing momentum that is slipping on this market. Gasoline put back in upward power in the market. Higher lows, higher highs. We do have Memorial Day driving coming, so it should not be of a surprise. If the market were to take out 192.64, that's this week's low from May 10th, that would be problematic on the chart and might set off a challenge of the 100 and the 18-week. Without that, market's still up and momentum got it right back to the upside. Heating oil, right into its top part resistance. Think of this as diesel fuel. Higher lows, higher highs, momentum picked back up, trend still up, but hit an upside target. You know, if you like what I do here, you might really like what I do in the mornings. And the reason is you're looking at me constrained. And that's because these are on YouTube and they're on our website for the general public. But the videos that are for my subscribers, they're unconstrained. And here's what I do. I wake up about 5:15. I do a lot of reading in the morning. I catch up with what's going on in Asia. I catch up with what's going on in Europe. Then, that's not me, but think of me having a cup of coffee, which I swear I do, and you have one. And we start going through the markets the same way each and every time. And there'll be a list on the side, by the way. You just click it if you want. It'll be for energies. Just click it. You'll be right in the energy section. You can jump around where you want. You can also do it on the pull bar here. I'm going to cover the chart action on daily charts. I'm going to tell you what I think the pros are doing after studying it, after having read and what's going on. I will review with you anything I think that's important in the technicals and fundamental part of the market. Remember, this is before the government reports come out that begin typically in the U.S. at 7:30 a.m. and often run till 10. So I'll give you an idea of what the big numbers are that people are looking for and what I think we should be alert on. But here's where I'm able to let go. specific trade ideas. So you wake up, you have an idea you want to do in the market, you scratch your chin, that's like that girl having the coffee, and you go, I wish I had somebody to talk to, or what does another pro think of this? That's what this is about. I don't know you, typically. You're able to see what I'm thinking, and remember, now I've got more studies on the chart, and I'm able to say buy here, sell there, do this, do that. And not only do I show my daily charts, I will go to pivot points on some. I throw a lot of information at you. So I charge for it. To start, 26.5 cents a day. You don't like it, you're done, 30 days. And it's not a month, it's 30 days at a time. After that, it moves to $15 if you want to keep going. Or you can take right at the beginning or whenever you want, sign up for a year subscription for $13 a month, all paid up front. That's up to you. Can you stop the 30 days at any time? Absolutely. That's what you got. I don't need a signed contract. You decide what you want to do. We'll follow it. We're here to be your broker, ideally, but I'm also here to offer research. You can call my staff. If you go to our website, go under the words research or education, Ira's morning subscriber video. It's all explained there, and away you go. I'm Ira Epstein. Hope you subscribe. Have a great weekend. I'll see everybody come Monday.